Welcome back. The president's mega bill, now signed into law, is expected to add trillions to the deficit and debt over the next decade. And the impact that will have on interest rates and even inflation is now under a microscope. Leslie Picker is here to take a closer look at that. Hello, Leslie.
Hello, Kelly. Yeah, Americans often see immediate benefits from policies that widen the deficit, things like tax cuts and spending increases, making them politically popular. So then why should everyday Americans be concerned about the deficit? This is the question I asked former Treasury Secretary Robert Rubin.
I think that's a very difficult issue because it's not obvious to people how it affects their standards of living, how it affects the economy, how it affects jobs, how it affects wages. But it does. It can profoundly affect all of this because it can affect our economy, the health of our economy, and the growth of our economy.
The U.S. is unlikely to ever run out of money to service the debt itself. It won't go bankrupt. Before something like that were to happen, the government would print more currency to fulfill its obligations. But doing so could be inflationary, meaning rates would go even higher and debt servicing would become even more expensive, risking a vicious cycle. The higher inflation and higher interest rates from the debt load could ultimately have a knock-on effect as well, making borrowing more expensive for businesses and individuals. This is known as crowding out and can lower productivity and wages and standards of living over time. The White House says the tax and spending plan it just passed will spur economic growth that narrows the deficit and lowers the debt load over time. But many economists are skeptical and worried about an emergency that would put the nation's fiscal health at risk.
We've had crises in the past, and we've gotten through them recently. 2008, for example, in the financial crisis. COVID, another big financial crisis in many ways. How do we get through both of those crises is that we actually use debt to get our way out. What happens now when debt itself is the problem? You can't use debt to get out of the debt problem. It's too late at that point.
To learn more about the potential market ramifications of America's debt load and dive into what it all means for the economy and international relations, check out our multimedia special report, America's Deficit Reckoning, at cnbc.com/deficit reckoning, or follow by listening to the Exchange podcast, Cal.